你好吗? Good morning. Happy Fed Day. Guys ready to get going? Yeah. Good. Yeah, for sure. Cool, then let's go. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guten Morgen. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com, a boutique foreign exchange trading firm that would like to earn your loyalty and respect through education. Why education, you say? Well, perhaps you'll develop the skills and the confidence you need to one day trade real money and not just survive, but thrive for years and years and years through profitability obtained from conservative disciplined trading. Until you get there, perhaps you'd like to visit TradersWay.com and open up a demo account and give them an opportunity to earn your loyalty and respect like they've earned mine. Now, the rules of engagement here at Forex.Today is pretty simple. Treat each other in the chat with dignity and respect. We're not interested in spams or advertisements and all that kind of stuff. If you'd like to ask questions, I will do my best to address them. And since I've been doing webinars on YouTube since it was a tiny startup you never even heard of, I've been here every single day on YouTube for 15 years, I guess, 14, 15 years. I've been doing webinars for 20. So anyways, I was here yesterday, I'm here today, and I'll be here tomorrow. So if I don't get to your question today, maybe tomorrow. That might be a good reason to subscribe. Therefore, you will be alerted to all future live streams. Could you please have the common courtesy of clicking the like button? Yes, I'm an only child, and I love to be showered in admiration. But really what I'm asking you to do is tell YouTube that this is quality content, and maybe they should promote this channel like they do the Get Rich Quick channels. You never know. Might be a good thing. So thank you for being here. Thank you for your positive energy. And welcome to FOMC Day, huh? FOMC Day. Oh, yeah. Big day, big day, big day. So what's happened over the last 24 hours? Nothing. There you go. Well, maybe this is an important day for all types of investors. Namaste, FT9. Your customer says, how important do you think the Biden-Putin summit's going to be? Let's see. The most powerful human on earth versus Sleepy Joe Biden. Yeah, well, let's see what comes from it. Cool. Yeah. All right, so let's take a look here. Aussie, Euro, CAD, yen, dollar. Swiss, like, look, nothing's happened in the last 24 hours. Yeah, fine, good, yeah. Let's take a look here. My WTI still heading up. Oscar Mike tickling the 73. Okay. Vaughn says, hey, Euro index looking like it's an inverse head and shoulders. Well, a couple of things. Let's go back to that. Okay. I don't know where you see that. Also, an inverse head and shoulders has to be at the end of the trend, and that's not trending. and also it's an index, it's not a currency pair. So there's a lot of things going on there. But the point that I want to make today is that the market is frozen as we wait for a fundamental risk event. So don't look for technical reasons to do something, because you'd be ignoring what's important to the market, and that is the fundamental risk event. So never on a day like this say, well, my CCI says I should buy it. Dude, nobody's trading but you. Okay? Nobody's trading but you. So again, in the last day or two, if you've lost a lot of money, you're just ignoring what's going on in the market. You're missing the market sentiment, the market's concerns. You're missing a lot, and you're losing money when nobody else is even trading, which is kind of strange, isn't it? So just be careful is all I'm saying. Right? You know what I mean? That's all I'm saying is be careful. Don't walk into trading days and just, do the same thing over and over and go over again and then miss the fact that this is a radically important Fed meeting, much more important than many, many, many others. And you can't ignore that big money is on the sidelines. So why are you throwing down big trades, right? Anyways, whatever. All right. So Goldie, let's get rid of this because this was from an old analysis, right? Okay. And so one of the things you might be looking for if you're a bear is, I think we talked about yesterday, that there's definitely bears sitting there, and bulls are waiting for things like a double bottom, higher high, higher low. Okay. And even then, even if you got something like this, it's still not a bullish trend until you're above this area, and so on and so forth, right? Muhammad says it's time to play golf. Yeah, I went golfing yesterday. How many times have I gone golfing in the last year or 2 years? Okay, so what does it mean that yesterday I went golfing and by and large nothing happened in the markets? Yeah, well, there you go. I planned it well. Cool. Going back to my WTI, okay, you just got to do your price action, do your PA. It might have come down and tickled 72, huh? That might be good enough. The other way you could look at it is this way. Lovely, right? Cool, right? Cool, right? Cool. All right, so whatever. Again, this is just WTI is doing its thing. Gold is sort of waiting just like a dollar. WTI is doing what WTI wants to do, irregardless of the Fed. So that's kind of interesting. Taking a look at our world of crypto. Oh, okay. Right? And I think what I was saying, if it wasn't this pair or this currency, it was something else. But we were talking about lower than that, you should walk away if you're a bull. Yeah, that's one of those things. Anything else going on? Well, all this is coming down. Okay, all this is coming down. Looks like there's some correlation, huh? Now they're all in different time frames. Let's put Ethereum there, and let's do this there. Let's do this there. Let's do this there. Okay. So I look at things like, is this important? Yeah, that's quite important. Okay. So I know there's bears here. Okay. Now looking down here, we know this bears exited here, and this is a bullish entry on this time frame. So I would expect if this held here, that this would hold here. Okay. I don't see the M2 anywhere in there. Okay. So what do you think? Is this a sell zone? That's a question mark. Or once again, are we just waiting? Ripple, 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 ripple. Ripple, ripple, ripple. We're at 2. Now we're at 83. It was 25. Okay. Amazing, right? Isn't that amazing? It was $2, and then a month later it was 25 cents. Okay? Dewall says, can you give us an example of multiple time frame analysis? Well, of course I do that every day, but nothing's happening now, so I'm not sure what you would want to see. Nothing happened on four different time frames. Okay? The most important thing going on today is the Fed meeting, and we're waiting for that to happen. Okay, so there was an opportunity yesterday. Okay? The last chance for bears was right in here. Okay? And there's the psych level. And we await the Fed meeting, and we're at 20 again. Okay? But a really interesting entry yesterday. Now, this is this, but I think this price I did here, not in May, but I think even earlier. So it's kind of interesting that it did go higher than the June pivot, which is based on May. And this line held, I mean, not perfect, but, you know, this whole area of resistance certainly did its job, huh? Like, think about it. How many bulls had to exit? Or how many bears had to sell to create that pattern? Okay? And the point is, it's not the volume per se. It's that they all had this general idea in mind. Whether you're a bull, you said, well, drive it up to 2015 and bail, or right? Isn't that interesting? Like, there's so many market participants in here. It's kind of mind-boggling, actually, to think about it. And yet they all agreed, yeah, we should bail around there. And they did. They drove it up and exited. I think it's quite amazing. Will the market act immediately? Absolutely it will. Okay. What would correlate with crypto? Risk on, risk off. It's just another risk asset. Most people don't trade crypto for its utility. Most people trade crypto because of, it's a tradable asset. Speculation and speculation only. Okay? Cool. So anyways, that's interesting. Okay, that's interesting. And then we'll see about this rotation. Okay. I had a small trade, I think, break even here. And so I'm out of that. Too bad, so sad. But I got to wait. And maybe I start re-entering again like this. Okay. Remember, my job is to identify market conditions. Okay. So ideally, when I see a market looks more like that, I can start adding to these positions. Nice, right? Mohammed, I want to sell dollar. So I have to be ready, willing, and able to sell dollar all day, every day. Okay? My fear is a lot of people look at the Fed meeting as a way to make a quick buck. I think that's, I mean, it's, yeah, okay, fine. But it's really short-sighted and low value. It's a very low value proposition. I look at it as more of a turning point in the market in which you can have permission to engage your long-term trading strategy. Okay? It's a predictable point in time. Okay? It's a little bit of a singularity, but it's predictable. So people might, right? People might make a quick buck. Let's say place a bunch of trades, make 100 pips, make 200 pips, and they're like, oh, and then they take their profit and now they have nothing. And on the long scheme of things, it's meaningless. It's just meaningless. So you made a couple $100. All right. Well, great. That's a dinner. You made enough money to buy dinner. Who cares? Right? So instead, what I'd like to see is this as a turning point based on, seasonality wise, fundamental wise, and that this could be an important part of a trend that we trade over the next, period of a couple of years. Okay. Or you could scalp the volatility and then be done. Whatever. Okay. Whatever. Do both. Okay. So I look at it as a very important part. I've been discussing this with my live group for months and months and months. And so it's a key turning point in our seasonality. And I'd like to see liftoff. That's all. Okay. It's just another time of the year. Time of the year. All right. So going back to this, okay, very basic entry. And nothing's happened since, and you're probably disappointed that you're slightly profitable, but you have no liftoff. Well, this is kind of what I mean by liftoff, where you bought where you're supposed to buy, and then it's like, wait, Fed. Now, we have some risk where it does this. You buy where you're supposed to. Wait. Okay, well, that sucks. And that could happen. But then again, if that does, you still just have to start buying once the market turns bullish again and not get caught up in the hype and the hot air and the laughing gas of short-term volatility. Do your job, brah. Do your job, brah. Okay? Cool. So anyways, we're playing this angle, right? And so what is a bull hoping for? Okay. So this is one plausible entry for today. You want to look in here. You might call it an inverse head and shoulders. Not really. Don't get all caught up in that nonsense. It's support and it's support. Can somebody give NTM the link to the FX Bootcamp training course so you can understand the moving averages and the oscillators and so on and so forth? Okay. Uche, I do that every day. This is one of those days where that doesn't make a lot of sense. So I'm not going to do that today, but that's a normal thing that I do. Correct. But we're in a market singularity. There's no volume right now. There's no volatility right now. These pivots are the same as they were 2 weeks ago. And then this week's pivots are based on last week, but last week doesn't predict this week. It just, right? Like this week is different from last week. Again, because the singularity in the price time continuum. And then daily is daily. So, I don't know. No. The answer is no. This is a fundamental scenario, guys. This is not a technical scenario. Okay? Okay? If you were a bull and using technical analysis, okay, this is the only bullish buy zone on the chart. So you already bought, my humble opinion. You bought here, you bought here, and now maybe you buy a dip here, but you should already know that it's already done. This is all based on yesterday, last week, earlier in the month. Walking in now and trying to figure out, excuse me, walking in now from scratch, trying to figure out what to do is just way too late. And the last thing I want to do is go into a Fed meeting and talk you into a trade, okay, and the market reacts oddly, and you're caught on a technical analysis trade based on what happened on Tuesday. And you're like, Tuesday has has no relationship to today. Yesterday has no relationship to today. Okay? And what happens today will dramatically impact tomorrow. So again, you should be thinking more about what is it that you want to do with Euro Yen. Everybody in my live trading group knows what I want to do with Euro Yen. And it's the same as yesterday, last week, last month, last quarter, and last year. So my only question is, will I have the opportunity later today or tomorrow or next week? But I'm not trying to figure out what to do. Okay? So again, that's a pretty classic trade. This was a pretty classic trade. And now we're sitting in wait. Okay? Now we're just sitting in wait. Okay? But I wouldn't now say, well, what's the weekly pivot point? What's the daily pivot point? That's all irrelevant. All irrelevant. You're using technical analysis in a fundamental event. Okay? Technical analysis, for example, going into the Fed meeting would have helped you here, 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 here. So doing something now during the event, here's the thing. This is my point. Maybe I'm not making it clear. But way back in this area here, we talked about this June Fed meeting. Can anybody confirm this? Can anyone confirm that way back here, the thing we were talking about is this? Okay? June 16th, specifically June 16th to June 18th. Can anybody confirm that way back on whatever this was, February? Okay? Back in February. Anybody? How many people? Right now, only 3 people. It's not really that impressive if only 3 people can confirm it. Can we have 10 people confirm it? Okay? So here's the thing, and this is why I'm sort of being bitchy about it. Can we do multiple time frame analysis in here to see if I can have a trade entry? What the hell? Like, what are you talking about? What are you talking about? Okay? And if you were going to trade it technically, you would have done it already by now. It's just like, oy vey, come on, dude, come on. By the way, when you look at this, does it look easier now? Okay. Does this look easier now? And one of the things I did in my early parts of my career, and probably still do, to be honest with you, I asked myself, why? Like, why does it look easier now? And what do I do in the moment that complicates things? And what can I do to see the reality of this? And of course, what I discovered is there's fundamental reasons for this. So let me ask another question to those in my live trading group. How many times since January 1 did I suggest euro yen down? How many times since the beginning of the year? How many times in the year 2021 did I show you fundamental and technical reasons for the euro yen to fall? How many times, guys? Not even one. Not even. Right? Batu. It's even funny, just the answer, right? Yeah. So anyways, cool, right? Okay. So now, like, well, what about the multiple time frame analysis? To me, it's, if you think about it, if you have fundamental reasons, I don't know. How do you just say it? I don't know. It's just, it's less complicated. Anyways, cool. Well, that's neat, right? That's neat. Okay. Big bounce is coming soon. Once again, we're in a key point in seasonality. I would not use the hyperbola of, or that's not the right word, not hyperbole. What do you call it? Excessive jingoism, excessive emotional descriptions. What do you call it? Not her. What do you call that? Anyways. It's not. Why do I have hyperbole in my mind? Anyways, no. Big moves coming. No. Not actually. Not, I mean, in the very, very short run, in the next 2 or 3 weeks, maybe. But no, that's not what I mean. No, that's not what I mean. It is hyperbole, huh? Yeah. So I wouldn't use that type of language because seasonality would not suggest such a thing. One of the catalysts to my thought process for June is the last chance for investors to get money in the market before they go to summer, but they don't want to do it before the Fed meeting. You understand? Yeah, rational exuberance, though, is more of a market description than this idea of overly emotional enthusiasm for technical or whatever. For short, it's much shorter term than a rational exuberance. That's more like a description of a bubble which occurs over years, right? So anyways, now we're splitting hairs over that, right? Do I think there will be a housing bubble in the next couple of years? Well, I'll describe it differently. I think there will be a bullish market in the real estate. The real estate market will be bullish for the next several years. Yeah, I do believe that. Okay, but I don't like the language of bubble, and I think the media uses it way too much. Right. Okay, so like Beast, once again, if you're trading weeklies, you've had 2 or 3 chances already this week to buy. If you're long, I would recommend dropping a stop, right? Okay. Will real estate go up in Canada? Well, if you look at there's a ratio, a price to benchmark ratio, and I forget what the benchmark is. Canada is more overvalued, if you want to call it that. That's not the right language. It's just, how about in some sort of percentage ratio, the Canadian housing market has gone up more than the U.S. housing market, I think is the better language. Okay? Okay? So in that case, would it be valued more in Canada? Well, maybe, right? Okay. So anyways. So once again, let's kind of look at this very quickly. Over the last 2 weeks, what do we know about this market? Okay. Just in the last 2 weeks. I would say over the last 2 weeks, I would describe this market as sideways. The trend is sideways. Okay. Yeah, Ben says housing is up another 40% in Canada. How is a young person supposed to buy a house? The way I look at it is all the hippies that grew up in the 60s and 70s that were drug addicts, they grew up, they got married, they got a job, they had kids, they ran the country into the ground. And then now they want you to pay for all their mistakes. Yeah. And you're like, well, dude, why do I have to pay $1 million for a house you paid $100,000 for? I got no money. I got no money, eh? Right? So I blame the hippies for sure. Okay. Mohammed says they're selling you a house based on considerable future inflation. Well, right? That I think that makes sense, especially for people that have lived in an economy of radical future inflation, right? Um, right. Like I think of my friend in Iran who he and I were talking about inflation in Iran and sort of how attitudes are so much different to finance and rent and real estate and other types of investments, and just purchasing decisions. And when you're not sure if prices are going to be quadruple by the end of the year or not, right? And it's just interesting where when you look at Canada and the United States, for example, people that are making investment decisions now have never had inflation. And the people moving into the industry read about the 2008 financial crisis in a textbook at school, right? And the old gray-haired, people have never had inflation in their life because they maybe joined the market in the 90s. And all right, and they might remember the dot-com days, but they don't remember the 80s. And they certainly weren't around in the 70s when the United States, for example, and Canada had high inflation. So it's amazing. The market in North America has never experienced inflation ever. So they don't really think that way. They don't think housing prices are up because we're going to be crushed by inflation in 15 years from now. It's just not here anyways, right? Not here. I'm not saying it won't happen, but I don't think that's the logic. But again, my friend would, with the experience of living in Iran, and having family in Iran, he might have that philosophy, right? And it's quite interesting, the difference, right? So Ben says, so what's the advice? Become a professional Forex trader and move away from a place where you have to pay $1 million for a doghouse. Move. You can do all right in other parts of the world. You're a Forex trader. You can go anywhere you want. You could be in a tiny little island. You could be out in the woods. You can, gee whiz, even move to Georgia. Right? So, yeah, just move, bro. Just move. Happy Patel says Canadians are like, well, who won't, why not buy a house at 1.25? Well, it's people don't buy houses when the interest rates are low. So that's why I said the real estate market is going to boom in the future, in my opinion, in my humble opinion. It hasn't even started yet because people don't buy when prices are low. People do not buy when interest rates are low. Okay. What you should have been doing, right, is buying the stock market. So now, if you already bought the stock market, maybe then you move over to real estate, right? Okay. This currency pair, I just did it, Mr. Kennedy. And I've been giving this message now for a couple of days, and I was hitting this message hardcore today, Mr. Kennedy. Nothing's happening right now, and nothing technical even matters to me. So as we approach the meeting this afternoon, you should already have identified, if you're a bull, the levels of support you've been looking for, so you can buy them if you get the opportunity. Or if you're a bear, you've already identified the levels of resistance that you wish to sell, right? If you get the opportunity. But there's nothing I can do for most people in a live free chat because most people are, or let's say many people would be asking me, how do I make money today on the Fed? How do I make money today on the FOMC? Well, go back to your plans from 2 weeks ago and set those up. What are your price levels? I don't have any price levels. Well, why don't you have a price level? I don't know if I'm a bull or a bear. Why don't you know you're a bull or a bear? Well, I don't do any fundamental analysis and I don't know anything about seasonality. So people in my live trading group, we've been preparing for weeks on this, right? Can you teach us how to trade on the lower time frames like a 5-minute? Yeah, I did that, I thought, yesterday or the day before. I can't remember. Okay. But once again, why would you trade on a 5-minute chart when nothing's happening? A 5-minute chart, a 1-minute chart, a 15-minute chart, these are all great when there's something happening in the market. The market is frozen right now. Right? Okay. Okay. So why would there's right? So here's the thing. If you zoom in here, you're going to get into a trade and the probability of it acting normal. Okay, Duvall? Let's talk about that. Let's say you normally are quite good at technical analysis. Awesome. I love it. And now you start trading today based on that. You're quite good. Okay, you're going to see that not a lot's happening on the higher time frame, so you're going to drop lower and lower, looking for the normal volume and volatility. It's not going to show up today. So you might trade today like you always do, And today it won't work. Do you understand that point? Because most traders, institutional investors, hedge funds, they understand that there is a massive fundamental event just a few hours away from now. And no, not the Biden meeting. Okay? And that before they deploy capital, we need to get closer to that event, or at least find out what that event is, right? Okay. But going back to Mr. Kennedy, right? Right? Going back to that, like, tell us about this pair. Well, nothing's happened for almost 3 weeks. Okay? So my trade plan is still generally this. And maybe on Monday you traded this. Maybe on Tuesday you traded this. And now that we're that close to this event, I don't think you really should be trading that at all. You should be asking yourself, would you buy this? Would you buy this? Would you even consider that? Okay? That's what you should be asking. What do you want to do, and why do you want to do it? What are the prices in which you would consider buying? Are you a bull or not? Now, bears are asking the same thing. Okay, if you're a bear, would you sell that? Oh, dude, obviously. Okay? So there will be bears at 156. I don't know if it's going to fall. I don't know. Okay? But we could look at these things like, what have I taught you? What have I taught you? What have I taught you? Bulls buy at support, bears sell at resistance, and pigs get slaughtered in the middle. Okay? So once again, you're already long this. If you want to be long before FOMC meeting, then you did it already. Bears are definitely going to sell this. Okay? And pigs, okay? Pigs will get slaughtered in the middle. And unfortunately, if you're trading in here, what might happen is all of a sudden volume does kick in, spreads do widen, and you get knocked out. And because of that, you lose sort of your confidence or the foresight of your analysis, and you never get into the good trade. Okay? Okay? And that's the thing. I don't want you to miss a good trade because you lost confidence from getting whipped out of a bad trade. I'd rather you just not have the bad trade. Okay? So most people are going to look at today's event as a way to make money quickly. Okay, and what I've been trying to teach you is do some analysis and be in it for longer. Be in it for longer. And to do that, you're going to have better information from more thorough analysis and a more thorough thought process. Okay? Okay, and imagine now you had made a decision long ago that this was up only. Okay? You filtered out all the down trades. Like this might have been at resistance, you skipped it. This might have been 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 resistance, you skipped it. And all you've been doing is buying bottoms, buy and roll reversals, okay, buy and roll reversals in an up-only strategy, right? Long only. So you're like, you tried here, got knocked out. Well, you bought the double bottom, higher high, so you bought the higher low, higher high, so you bought the higher low, higher high, so you bought the higher low. And you expect to see a new higher high, and you expect to buy a new higher low. What if that's all you did? Boring, I know, right? You're like, oh man, Wayne, with this 4-hour chart, I only get one trade a week. Yeah, I know. We call that swing trading. Wayne, I get sick of buying it at the green zone. I know. Right? But why do you need to have it more exciting? Right? Give me 3 or 4 time frames, Wayne, so I can figure out what I want to do. Well, why don't you know what you want to do? Well, I have to look at 4 different time frames. Okay, 4 different time frames are good. I'm not knocking on that. Okay? But most people are missing the basics. They're not buying at support. And why is it that you don't buy at support? You don't identify support? Maybe. I think what happens is you don't know that you want to buy at support. And that's the big, right? You see what I mean? That's the big issue. People just don't know that they're a bull on pound yen. So I spent a lot of time working with the group on doing analysis so you can make a decision. Okay? Okay? So you only buy. Okay? Right? So even on a smaller time frame than this, you can see this up, down, down, roll reversal, buy. Up, down, roll reversal, buy. Up, down, roll reversal, buy. Up, down, down. You might consider that roll reversal, right? And then what? Sort of consolidation. Oh, man. And then resumption. Okay? But you should be able to see inside this technical analysis, right, these important levels. Okay? That's an unfortunate, month? But it didn't change anything fundamentally. Okay? Cool, right? Mohammed says at the end it's a 50-50 chance. Well, I wouldn't agree with that because there's fundamental reasons for things. So I would say if CAD yen is probably, and I mean, but the probability is what I mean. If it's probably going to go up because of future demand for oil, okay, and an increase of supply of Japanese yen. Why do I know that? Well, my analysis of macroeconomics suggested over this period of time the yen and dollar should, I don't know if it will, but dollar and yen should weaken. So if I take that into account, that I believe based on my analysis of macroeconomics globally, and that's what I mean by macro, the global macro activity, the supply of Japanese yen during this period of time it will probably go up. Meanwhile, this macroeconomic activity suggests that there should be an increase of demand for energy. And in that case, since Canada is one of the major global players of selling energy, that demand for that product should go up. And therefore, demand for the Canadian dollar should go up. So in that case, Mohammed, I would argue against the 50-50 idea because you're skipping the whole point of the reason why things move. And I would have to say it's more like an 80-20 this sucker's going to go up. There might be periods of time of consolidation, but my fundamental belief is probably higher than 80%. And once again, anyone in my live group would know that's all I've ever talked about for quite some time, longer than that period. Okay. But now seasonality tells me, yeah, there should be an up and some consolidation. Cool. Right on. But it doesn't change my fundamental bias. Okay. By the way, you'll probably find a Fed meeting in here somewhere. What? You'll probably find a Fed meeting somewhere in here. What? And hey, you'll probably find a Fed meeting somewhere in here. What? Okay. Consolidate, validation. Consolidate, validation. Consolidate, validation. Maybe. Because I don't know the future. But I think 50-50. If it was 50-50, then gambling would work. Okay. Mohammed says, well, it depends on global productivity increases and getting out of the supply bottleneck. No, that's your job. That, my friend, is your job. Okay. Cool. Vaughn says, what do I usually do? Take profits every day or wait for a week? Sometimes I wait a year, Vaughn. I'm generally not a day trader. I'm more of a swing and position trader. But I have no problem with day trading. Lufle. Okay. So, check that out. Okay. I'll get rid of this now. I'll even get rid of that. I'll get rid of this. Let's just simplify a bit. What do we have here? This is where bears will sell today. How do I know that? Well, it's resistance. Where else would they sell? Okay. So bears are going to sell around 123. Okay. My key line in the sand right now is 121, but we discussed that more than 2 weeks ago. I'm not surprised that we're at 121. I'm just a little bit disappointed because, I'd rather it take off, but it's not that surprising. Okay? We knew this more than 2 weeks ago. Isn't that crazy? 3-4 weeks ago, we had this price, 121. Great. The next price in which bulls will buy is 120. So what I would like is for 121 to hold. I don't know what'll happen. I just don't. Okay? I just don't. That's what I would like, but the market doesn't give a damn what I want. So I look at that and I'm like, well, my technical plan 2 or 3 weeks ago really relied on 121. Right? So, okay, great. What'll happen is if 120 is our number today as a bull, I'm only doing a bullish point of view here. A bullish point of view, if I buy at 120, this gets ugly in July or August if we're back at 123. Makes my job a little more difficult. So I'd just rather not. But because of that, my devil's advocate tells me because I really don't want it to do this, it'll probably do that. So I have to decide now if I get an opportunity to buy it at 120, will I do it? Okay. I want this, but what will I do here? Okay. Now, the bearish point of view, okay, is this. There's a little bearish zone right here. Okay. Which tells me bulls already bought this, bears already bought this. Do you see this? The smarter money already bought here. Oops, let's make that in blue. They already bought here and they already sold there. That's just called technical analysis and preparation. There is no other trade. Cool. Which one's right? I don't know. I don't. They don't. But bulls buy where bulls buy, bears sell where bears sell. The next zone is here in which bears will sell. Okay? So let's mark this down. 122 has already been sold. 123 will also be sold. 121 was a buy. Okay? And 120. You're like, wait, they're just buying and selling psych levels. I know, huh? It's not that complicated. Make sure you're not overcomplicating things. Okay? You get it now? It's actually quite basic, isn't it? Mr. Kennedy says, so ideally, if I understand macroeconomics sufficiently and I manage your capital properly, your positions are long-term holding positions. They can be. They don't have to be. But it's not just macro, because macro would describe whether the business cycle, is this way, or let's say how about this? Macro would tell you if the fundamental trend is going one way or the other, but it doesn't explain the business cycle. It doesn't explain the seasonal cycle. Okay? Okay? And then somewhere in here, there's also like a super cycle. Okay? So for example, if we're talking about a business cycle, this time frame here could be 8 years. And the pink would be 1 year, for example. I don't know if that adds up, but what I'm saying is there's cycles inside of cycles. You have to understand why. Okay? Why is money going to one place or the other? The next part is, when does it typically happen? Okay? So people that have been taught to trade Forex like it's Fortnite, like it's a video game, they never understand why. What they don't understand is that Forex, right? Forex is a business tool. Businesses move money to transact business activities. Yes, some consumers will move money because they want to visit a hobbit town in New Zealand and they're going to need some New Zealand dollars. Or remittance where, a Mexican American is going to send money back to mom and pop in Mexico. There's that kind of flow. But the vast majority is banks and businesses moving money to transact. Now, there's something called the network effect. Okay? And I gave example the other day, like you hate Facebook, your friends hate Facebook, but everybody uses Facebook because you use it and your friends use it. Your friends use it because you use it. You use it because your friends use it. Meanwhile, you and your friends all hate Facebook. It's strange. It's called the network effect. Okay? Now, the US dollar is exactly the same thing. Okay? Country A might hate US dollars. Country B might hate US dollars, or business A or business B, or citizen A and citizen B of different countries. But they might just agree on pricing the deal in dollars so that they are able to, then you can say, well, $1 million US will cost me in my country 23 million, whatever. And this person says, okay, well, they're sending me $1 million. So to me, that means 17 million of my currency, right? And it's just it's a way of speaking. It's like, it's like agreeing to speak English at a business negotiation, even though English for you is a second language, and your adversary on the other side of the negotiation also doesn't speak English as a primary language, but you both speak English, so you agree to do the meeting in English. Okay? It's like one of those things. Okay? And so what we're looking at is, why does Japan and Malaysia do energy deals in United States dollars? Well, because most contracts are priced in dollars. Therefore, most contracts are priced in dollars. Therefore, most contracts are priced in dollars. Right? And you're willing to go in and get some dollars from your central bank. And guess what? Your central bank has dollars, and they're ready, willing, and able to receive the US dollars and then give you whatever you're buying. So the whole thing just gets priced in dollars, right? Or yen. Okay? And it's just a network effect. Okay. So Muhammad says every 8 weeks, huh? Okay. Is it 8 weeks? I think it's closer to 6 weeks. So I just grabbed something off Google. I'll post it in here. I just copied this from Google. Oh, 3. Look at that. It's 3 characters too many. I can change 8 to 8. Nice. I don't have a citation from that other than Google. All right. Cool. So I'll leave it at that. No, I won't do 4 different time frame analysis, because that sounds like you're trying to figure out what to do. And if you don't know what to do already, you shouldn't be doing anything at all before the Fed meeting, And you might also want to contemplate maybe not trading a lot after the Fed meeting, because you'll be chasing price and have no reasoning. And I'd be cautious. That's all. Okay. It'll be the press conference, okay, Peccary, because they're not going to announce a policy change, but it will be discussed that they're thinking about the taper. Okay. Why do you want my email address, Crypto? What do you need? Boo boo. Boo doo boo doo boo. Boo doo doo boo doo. Boo doo boo boo doo. Boo doo doo doo. Still back at plan A. Once again, ask yourself, are we trending up, down, or sideways? Sir, can you suggest me any Forex course? How about my Forex course? How about that one? fxbootcamp.com. That might be a good start. Wayne, what is a taper? The Fed currently purchases $120 billion in assets per month as an emergency measure to support the economy and provide accommodative conditions. So a taper would be cutting this to 100 billion a month and then 80 billion. Okay? So on and so forth till eventually, okay, there. So it's going from 12 cigarettes a day to 10 cigarettes a day to 8 to, right, to 6 to 4 to 2 to 1 cigarette a day, and then you have quit smoking. Versus cold turkey where you just stop. Okay. All right, cool. Wayne at fxbootcamp.com. Cool. Cool. No, Wayne at the name of my company, fxbootcamp.com. But I'll tell you, if you don't know the name of my company, I'm a little bit skeptical to begin with. So anyway, send me a well thought out, well written email. Sir, I was talking about like a free course. There's, I don't know. If go ahead and do some research, find a free course, you'll find it. I have a free course. You can do some research. I'll look. I'm sure you'll find many free courses. Greetings, Wayne. Do traders front run the taper? Well, of course. And media was suggesting that that was happening earlier. We talked about that, I think, maybe on Monday or maybe late last week. But you know interest rates are going to go up. That's what a taper does. So people would be selling the treasury market. So there could be an accumulation of short sellers, if you will. And the media, and I think it was Bloomberg, was suggesting that there was a force of traders going after a short squeeze. And I thought that was funny because, I don't know, a $50 trillion market is not the same as GameStop.com, but they're like, well, everyone's interested in short squeezes on meme stocks, so this must also be the same. I don't fully believe that, but is it possible that that is somewhat true? And I'd say, okay, sure. Many people would be short because that makes sense. And maybe, but the amount of treasuries you need to buy to drive up the price, drive down the interest rate from 1.6 down to 1.45, was it an effort to kill short squeezes? Once again, I'm sure someone was doing that, but as an overall market force or sentiment, it seems quite a stretch in my humble opinion. Okay. Keno says, after the price, is that the price you want to be? How do I pull the trigger? 5A cross, MACD. MACD is too slow because that's a market indicator, not a price indicator. Stokes is fine. 5A cross is fine, but you'll find out they're generally the same thing. Price action is really good. Yep. Mostly price action, I would have to say. You have to understand that by the time I'm ready to pull the trigger, I don't need 19 different confirmations. Okay? Things like moving averages and oscillators and all of that are used in my strategic analysis. But when it comes down to pull the trigger, I could be on a 1 minute chart, 5 minute chart. I see what I want. I see the reaction. Boom. Done. 99% is in the planning process. Pulling the trigger is quite easy. And by then, because my my lot sizes are small relative to my account size, I have more than enough stop loss. So I'm not looking for perfection, but nor do I need 5 levels of confirmation. Okay? Okay. Cool, right? One year of holding? Yeah, so I did a trade 2 years ago, I think. And I shorted USD, Turkish lira. I was short for about 10 months. And I got knocked out with 0 pips. Okay, so I got knocked out at break even. Good trade or bad trade? What kind of return on investment do you need to see before you consider it a good trade? What kind of ROI should one achieve in 10 months to consider it a success? Oops, not real. Sorry. Huh? Mark Vaughn, what kind of ROI in 10 months should somebody achieve? Okay, it's actually, let me put this, it's not actually ROI. What kind of internal rate of return would you expect? It's actually technically IRR. Okay. You guys are funny because in a year, you might, on a high yield bond, earn 5%. In the stock market, you might earn 15%, which is a booming year. Okay. So Von Mark's not answering. Okay. But that one earned me 1,000%. And I earned 0 pips. Okay. Can anybody confirm? Can anybody confirm that experience? Absolutely. Kudzi, I've done many lectures on that. Many even recently. Jimbo says 800%. Was it only 800? If it was only 800, I apologize. I don't actually remember. I thought it was about 1,000. Chris says, yeah, large accounts maybe 10% a year is good. With small accounts, higher percentage. But that means smaller traders are taking higher risk, Chris. And therefore, the vast majority of people will fail. So they're like, my account's small, so I must gamble to get it big. And yet they end up with 0. So it's a really strange logic to me. I know it's human nature, though, so I'm not disagreeing, right? But it's such a strange logic, right? Because the vast majority of people end up losing 100%. Even if they get to 100%, they'll end up at 0%. And it's really strange because once you double your account, you still don't have any real money. And then you double it again, you still don't have any real money because you never had real money in the beginning with, right? So at some point you need to like double your money, double your money, double your money, double your money, double your money. But now you're in this process of that's how you think, that's how you trade. Meanwhile, every single moment you're on the precipice of disaster. And of course, eventually the bridge collapses. It just does. You can't cheat physics, right? So it's very difficult, right? It's very difficult to change that, right? Okay. Mark says, what's the best high interest pair at the moment? USD ZAR and USD MXN, right? So Rand and Peso are quite good. Cool. Well, thank you for being here. Would you please click like? Would you please subscribe? Peace on earth. May the pips be with you. May your profits be above average. Cheers.